All right. I believe we are live. So, all righty. Well, good evening, everybody. Hopefully, we are live on Facebook. I am Lindsay Frangie, and this is Candy Bowen, and we are actually going to discuss what steps there are in home ownership to buy your own home. We're mainly doing this for first-time home buyers, but sometimes people need a refresher course. So wanted to ask, what are um, the programs that you might want to learn about? And what do you think the minimum credit score is to be able to qualify for a mortgage? So while we are getting everybody on the live, go ahead and put what you want to know in the comments, and we will answer those at the end and see what everybody was thinking. Give me 1 second. I'm going to just check this out. Yep, we are good to go. One second. Let's give them a few more seconds. Just getting the group or the live some information on what we're doing. There we go. All right. Well, let's jump into this. So, Candy is a realtor, but I'm going to go ahead and introduce myself. I am Lindsay Frangie. I've been doing mortgages for 23 years. I am a Georgia Peach, born and raised, always lived in Georgia. And I am born in Elberton, Georgia, live in Canton with my 5 dogs and husband, and love Georgia, but I'm also licensed in 8 other states, so I can help you out in multiple states.
My name's Candy Bowen. I'm the broker owner of Southern Home Management Solutions. Our office is in Villa Rica. I've been a licensed realtor since 2004, so 21 years. We are also licensed in Alabama, so we can help people to buy and sell homes in Georgia and Alabama. I'm also born and raised in Georgia. I live in Dallas, Georgia, and born in Villa Rica, actually, so I didn't go very far from home. My company is also an authorized HUD listing broker, and we'll kind of get into that a little bit later and tell you what that means.
Nice. All right. Well, let's get into it. So there's a lot of acronyms that come up when you're buying a home, whether it's real estate or mortgage. There are a lot of different things to think about, and it's really important that you have the right team on your side to look out for you and explain these acronyms to you and explain what products are available to you and show you the best route to get you there. The process is pretty extensive, but a lot of it is taken care of by your team when you are working with a realtor and a mortgage lender. The first step is always to get pre-approved. A lot of people will start with the house hunting first, and that is a big mistake because you don't know how much you're going to qualify for. You don't know, the program that you might qualify for, and you're kind of putting the cart before the horse because if you're not pre-approved, you are going to have to be in order to put an offer on a home. The second part is where Candy will take it away.
Second part is house hunting. And we have to have, before we can make an offer, we have to have that pre-approval. So as Lindsay said, If you're hunting a house first, you're going backwards because even if you find the one you love, unless you're pre-approved, we can't even make an offer at that point. So once we do find the one you love and we're ready to put together an offer, that's our next step. From that point, we make an offer, it's accepted by the seller. Then we get to the next step, which is having a home inspection and an appraisal, which would be ordered by Lindsay. And then from there, it goes back to the mortgage company for the underwriting.
Yep. And basically, we're going to go through a little bit more detailed in the steps, but we're going to go through underwriting. And what that means is basically, I'm taking all of the documents that you've submitted, your application, and submitting it to the underwriter for the underwriter to review the risk, review the accuracy of all the information submitted. And then oftentimes they're going to condition us. Condition us means give us an approval, but say, hey, we need these things in order to be able to approve this clear to close. Those are things like the appraisal, the title work, getting your homeowner's insurance. These are things that we will get along the way. Title work and appraisal are ordered by us. Back in the day when the market crashed, we had some rules that changed. So you cannot order your own appraisal. It has to be ordered from the lender. But once everything is back, we actually get the great words clear to close, which everybody loves to hear. And then
Absolutely.
we go to closing, which is the best part when everybody's happy, smiling, and you get those keys.
Yes.
So the pre-approval is the most important part in my eyes because it is going to tell you how much can you afford, what are your monthly payments going to be, and what is the necessary amount for the down payment. Every program has different guidelines for what the minimum down and what the debt to income ratio, what they'll allow on properties. Each one is going to have different parameters. So it's important for you to voice what you want and what your plan is with the home in order, to buy the home. If you're planning on wanting to buy a home that you can earn income on, well, that's going to go with a certain program, not necessarily another program. So just, having a heart-to-heart conversation with your lender about what your future plans are and what you're hoping to accomplish is going to allow them to basically put you in the right product. In order to get pre-approvals, there are a lot of companies out there that will pre-qual you. And a pre-qualification is a lot different than a pre-approval. A pre-qual is basically based on what you tell them. So you may or may not fill out an application, and then you tell them that you make $60,000 a year. You tell them that your credit score is a 720. And those are really not worth the paper they're written on, because if they haven't verified it, there is a chance that that is not going to close. So I do not write pre-qualifications. I write pre-approvals. And pre-approvals mean that I verified your identity. I have 2 months bank statements. Or if you're getting a gift, I have validation on the fact that you're getting a gift. Retirement investment accounts, your W-2s, your pay stubs, your child support, alimony, divorce decree. If you're a veteran, we'll need possibly the DD 214, could need a point statement. It just all depends on what, branch of the military. Also, you're going to want to start to establish who you want to work with. Inspectors, there are a ton of them. Candy has many that she knows and trusts and recommends, and she can refer you to one based on what you're looking for, or she can give you a couple of different names. You've got to decide on which realtor you want to work with, and it's important to work with one that knows what they're doing, because in this day of age, there's a lot of investors out there selling homes, and you need the proper representation. Somebody who knows what to look for.
House hunting. So once Lindsay has you pre-approved, we can go house hunting. And so there's a couple things you need to know about that before we actually get started and start actually looking at houses. We want to think about agency. There are buyer's agents, there are listing agents. A agent represents the buyer, a listing agent represents the seller. And that is who they are looking out for. Everything they do is in that party's best interest. So you want to have somebody to represent you in a transaction. You don't want to go to the listing agent and make an offer because they're looking out for the seller. They're not going to be interested in what's best for you. They're only interested in their seller's bottom line. And that's all they're going to be worried about at that point. So you want to be sure that you are represented in the transaction. When you meet with an agent before you look at a house, they're going to require you to sign something. It is a buyer's agency agreement. And what that does, that gives them permission to represent you in the transaction. And it also gives them permission to request that their compensation come from the seller. And all of that will be going over with you in the process of going over that document so you know exactly what you're signing. Now, you can only sign a document for 1 day, or you can sign a document for 90 days with that agent. It just depends on how comfortable you are with them and what relationship you have. So don't feel like you need to be pressured into signing something that will last months and months because you don't have to do that. But you do have to sign something with an agent in order to be shown properties. It's been made law, and we do have to abide by that. But again, you want to look out for you. So get to know that agent, talk to them, express, exactly what you're doing and your time frames, exactly what you're looking for, and they will work with you to find what you need in the time that you need and help you every step along the way. So that's what you want an agent for, to take care of you.
And I would say that I just saw a news clip about a builder in the Atlanta area. There was, I don't know exactly how accurate it is, but basically, people are saying the houses are falling apart. They're having all sorts of problems. And when they went to the builder neighborhood, they were told they did not need an agent, that the builder's agent would handle everything, that they were a one-stop shop. I'm telling you, friends, if you are going to a one-stop shop, that means that they each that builder has a hand in the pot, and so they are going to
Handle
control it
everything
to
for the
their
builder.
benefit. To their benefit, they're not going to
Mhm.
look out for you when they have to look out for the builder. That's
That's
not
right.
possible to look out for both sides.
Mhm.
Yep,
That's right. Get represented by an agent. Make sure that you are represented in the process. Don't just go and sign a document without looking it over and be sure what you're getting into. So that is imperative, to make sure you're represented in the process. Okay,
absolutely.
so you're represented by an agent, hopefully me. And we go to, when we look at houses, we find the one that checks all the boxes. That's exactly what you want. The next step is we need to make an offer. Now, before we put it just the numbers down on paper, we need to do a little bit of work, and that's my job. I'm going to look at what the houses are selling for in the neighborhood. We're going to look at the condition of that house, how long it's been on the market, what your financing terms are, what we need to cover in our offer in order to accommodate your loan situation. What is the condition of the seller? Are they motivated? Are they ready to sell? A lot of times we can find that information out in the listing or in conversations with the listing agent. And that's part of what I do. When I call on a listing, I try to find out, what will the listing agent tell me about it? What can be gained from just a conversation before we go look at it? Or even after. Hey, I've got a client that's interested. What can you tell me about why the seller is selling, anything else about the property? We're going to take all that information and we're going to put together the best offer that will work for you. Now, the seller may agree to that, or they may counter offer that, or they may decline that. But we'll just have to look at each case on a case by case basis. Each house is going to be a little bit different, and if we do our due diligence and we look at everything that's available, we can come up with the best price that we feel, and the seller will come back with what they feel, and at some point we'll meet minds and we'll have a contract, and that would be the next step. We actually have a binding contract that we can go from there.
Well, and when you're making the offer, this is why it's so important for the realtor and the lender to actually be able to communicate. And just to give you guys a little bit of information, so there is a privacy thing with lenders that we can't tell the person's financial information. We can't give them personal information about you. But at the end of the day, if you're a buyer and you need closing costs, let's say that you're doing 100% financing as a VA loan, you're a veteran, you don't have a ton of money, you might have a few $1,000s. There's money up front. And, I think we're going to go over that, but earnest
Yeah.
money, those kinds of things, there's money up front that you need. But if you don't have money for closing costs, then you have to voice that to your agent. And when I'm working with Candy, we basically get with the borrower and they know that we're talking about what they need in order to make the deal work. And so, if I know that the closing costs are going to be $8,000 and I tell Candy, hey, they're going to need 8,000, if she goes back to the seller and they say, well, we can only pay 5, then y'all have to decide whether, hey, we get 3,000 as a gift and we take the 5 and just, take the offer, or do we, move on to the next house because they're just not going to pay what you need. So, communication is key, and that's why we want to, talk about working as a team, because at the end of the day, the more that we can actually correlate and teamwork together, we're going to get closed. It's going to be a lot smoother. There's not going to be any surprises. So that's important to always voice. If you need closing costs, let Candy know. But know that if her and I are working on the loan, I'm going to tell you that we're going to need to let her know.
Right, right. And sometimes we just have to get creative when we're making an offer. And that's part of the benefit of the realtor and the mortgage lender working together, because we can come up with a plan of what might work and what might not. And that helps us out when we're putting together an offer for you.
Absolutely.
Earnest money deposit. Okay, what this is a amount of money that is paid up front that shows the seller that you are committed. This it sometimes is based on the purchase price. Sometimes it's a set amount determined by the seller if it's a bank or an entity, not a regular homeowner. But typically it could run between 1 to 3% depending upon the situation. And it again, it's money that has to come out of your pocket up front. It's not part of your closing, but it will be credited back to you at the closing table. So you're not losing that money, but you do have to have it up front. So it's good to have a little bit set aside for that reason, because when we make an offer on a home, we have to have earnest money, and that will have to be submitted with your offer or within a few days of your offer. What that's for, again, is to let the seller know that you're committed. It keeps the buyers from just backing out for no reason. It goes towards your closing costs or down payment. But there are ways that you can get that back. So if for some reason the house does not appraise for what you're offering, or the inspection comes back with significant issues that you don't want to deal with, you will have a way to get that money back. And that's part of my job, is to protect that earnest money. So anytime I'm writing an offer, that is always in the back of my mind, is to protect that earnest money. So I'm going to make anything that I need to make a condition of that offer a condition, such as it must appraise. You must be able to get financing. Of course, it has to be, the inspection has to go well. All of those things will enable your earnest money to come back to you for some reason you choose not to buy at that point.
And you also would get your earnest money back, say, if the seller had a title issue.
Absolutely.
Yep, and that does come up. And sometimes people will list too soon and they haven't gone through probate, or sometimes an investor. This is a big one. So when you're doing an FHA loan, and we'll get into this later, there's a lot of investors that are buying homes and then flipping them. Well, there's deals that end up where you might put down earnest money, and then if you're not working with Candy, Candy would know because she would see the date that they bought the property. But I've actually gotten a contract from a FHA buyer, and it was 36 days after the investor bought it, and I was like, oh no, this isn't going to work. So if we'll go into that in a minute, but FHA, you have to wait 91 days to 180 depending. It's 91 days to flip a home and take FHA financing.
Right. And that's part of that process, as I discussed before, getting to know the house we're making an offer on. So that would be obvious to me when I pulled it up. I would see when it was last purchased, and that would be a red flag automatically if we had an FHA loan. So again, you want your realtor to know what they're doing when they're helping you put together an offer on a house.
It's worth its weight in gold. I can promise you that. All right, well, let's get into the fun part. I know everybody loves to talk about the hardwood floors and fixtures and big yards, but nobody likes to talk about the mortgage part of it. This is the more boring part, but it is what makes the dream possible for most, unless you have all cash. If you have all cash, you don't need a mortgage. So if let's say that my credit is good and I have a down payment. The program that you are best going to fit is a conventional loan. Conventional loans are for first time and repeat buyers. Those are also known, you hear Fannie Mae and Freddie Mac. You can put a down payment as low as 3%. If you are a repeat buyer, not a first-time home buyer, which in Georgia in most states, a first-time home buyer is someone who has not owned a home in the last 3 years. If you owned a home 5 years ago, you're a first-time home buyer again. But basically, you would need anywhere from 3 to 5%. You do not need 20% down to get a mortgage. The days of, grandma and grandpa telling you you need to save for your down payment and put down 20% is a myth. You only need 3 to 5%, and others would do as little as 0% down. But the great thing about a conventional loan is that you don't have to refinance to eliminate the mortgage insurance. So if you only put down 3% and equity grows like it did between 2020 and 2023, you're going to be able to drop the mortgage insurance even if the rates stayed up. So that's one of the benefits. You can use a conventional loan on almost any property. You can actually buy a multi-unit with conventional and FHA with the minimum down now. So you can actually buy a 2-unit and offset your mortgage with the rent with a conventional loan. You no longer need that big down payment. They have fixed rate and adjustable rate loans. Adjustable rate loans are not around right now in this environment. They are very hard to price. So with fixed rates, you want to get a fixed rate. I don't really like to do adjustable rate loans that much. Gift funds are allowed. Gift funds are allowed on every agency type loan except if you're buying an investment home. If you're buying an investment home, you cannot get gift funds. Some of the conventional programs that can give you money towards your down payment or closing costs, these are either income-driven programs or based on where the property is. So the first one that we have is a $2,500 lender credit for qualified buyers earning less than 50% of the median income. The second one that we had it and it's already gone with us. There may be some funds remaining with some of the big banks around, but the FHLB, this is Federal Home Loan Banks. These were grants that were available for qualified buyers. They're typically awarded in the very beginning of the year, first quarter, and they're typically exhausted before the end of the year. The $20,000 funds, which was the highest grant, is the fastest to run out. So that is already gone for us. We do have first-time homebuyer breaks on rates and lower rates on mortgages for those who are first-time homebuyers. And if you make under 80% of the median income, You can qualify for what they call home ready or home possible. Those are programs that give you reduced mortgage insurance and a better rate than what you would get if you didn't qualify for those. And these are things that when you apply, I'm going to look at every single one of these options. I'm not going to assume that you know what you want, because I do this every day and you don't. Every property is going to be different. If you find a property that has, potential for income producing, well, that's not going to work for one program right away. So these are things that I'm going to basically look at and say, okay, Mr. Smith and Mrs. Smith, you qualify for community lending because the property that you went under contract is in the designated area. So I'm going to be looking at these things and make sure that you're aware that you qualify for these. The community lending is a really great program. We have partnered with a large bank that is giving up to a half a point lower in rate or up to 4,500 in a lender credit. And then springtime, there's multiple offers. We are going to end up where if rates start trickling down even more than what they are now, there are going to be multiple offers on a home. If you qualify for a conventional loan, I can do what is called a can-do certified pre-approval. What that is I get you fully underwritten and we guarantee that you will close, or we will pay the buyer $5,000 and we'll pay the seller $5,000. That can go a long way when you have multiple offers on a home and Candy writes it in the special steps that we have a buyer that is fully approved, and if they don't close, we'll hand you the $10,000 the lender is paying them.
And that's an incentive for a seller. For a seller who's got multiple offers, your offer looks great, but that's just a little bit extra to kick you over the rest of them. If they're guaranteed $5,000,
Mm-hmm.
they're gonna pick your offer over somebody else's.
Yep.
So it's a little extra to make your offer look more
Attractive.
desirable than the rest of them.
Yep. That's right. And once we get you pre-approved, I can look into these programs. The second one is I'm looking for a house in a rural community. This is going to be USDA. This is one of my favorite loans. There is no down payment required for this program. It is 100% financing. Now, they will go off of your whole household income. So if you have 3 adults living in the home, 2 children, they are going to use the household size to calculate the maximum allowed income for that area. As long as your household income is below the income limit for that area, and as long as the qualifying income qualifies you for the loan, you can buy a home in USDA areas. These are rural areas, and yes, they do loans. They don't just have stakes. I know everybody thinks of the USDA choice stakes, but they do home loans as well. These will cover a wide variety of property types. However, they will not cover income producing properties. So when I was telling you earlier about the in-law suite or the manufactured home that's on the back of the property that could be rented out, that is not going to fly USDA. And, if Candy and I are working together, we're going to be able to know that right up front. That's not going to work. You get fixed rate loans with a USDA loan. They are 30-year fixed loans. They have a wonderful streamlined refinance program that we can do called the Simple Refi. Oh no, it's USDA Simple. Yeah, Simple Refi. It's super easy. And when rates go down, we'll get you the lower rate by streamlining your USDA loan into a new one. It is the only program that allows you to roll in closing costs if the house appraises for more. A lot of people don't know this, and sometimes the appraiser is going to come in right at the price or maybe a little bit above. But sometimes you get an appraisal where, let's say the contract price is 100, just for simplicity. And let's say the appraisal came in at 103, but the seller only agreed to pay some of the closing costs, but you're bringing the other 3,000. Well, now that the house appraised for 103, we can roll in the 3,000 that you were bringing because it appraised higher than the price agreed on the contract. So that is another reason why I love USDA. Also, a big change this year is manufactured homes. Double wides are going to be allowed on USDA, which I feel this is going to open up affordability for more people. Um, it's got to be a double wide. It's going to have to be 2006 or later, and that's supposed to come out in May. They also talked about eliminating the household income requirement, but that still has not happened. So we'll see if that happens. That could open up a lot more too.
And USDA is not subject to the time frame for investors.
Yes.
So that is, if an investor buys a property, remodels it really quick, puts it back on the market with FHA, you have to wait that 91 days. With USDA, you can buy it right away. So that's another perk for USDA if you're looking at an investor home that's been remodeled.
Yep, that's a great point. And the next one is I'm searching for a low or no down payment option. Now this is going to be FHA. FHA is built mainly for first-time home buyers, but repeat buyers use it too. They are more lenient on credit scores and they're more lenient on debt to income ratio and previous, NICS, bankruptcies, foreclosures, credit problems. If you've had late payments in the past, these are built for less than perfect credit. 580 is the minimum score that we can accept. I'm not going to tell you that is the lowest that FHA will accept because they technically will accept down to a 500 score, but it requires 10% down, and a lot of lenders don't do it because the guidelines have you almost can't qualify if you have that score and need to put 10% down because the requirements you're likely not going to hit. So 580 is the minimum for FHA. Just to backtrack for a second, we require 600 score for USDA. But USDA does have tighter guidelines on their debt to income ratio, which we're going to go over in a minute. One of the biggest factors of qualifying, well, 4 factors: your credit score, your income, your assets, and the collateral. Those are the things that we're going to look at. Debt to income ratio, that goes into it. So these are going to establish how much you're qualified for, how much your down payment's going to be. So FHA is a wonderful program for first-time and repeat buyers, and they have the ability to put grants or down payment assistance behind it. So usually you need to put down 3.5% for an FHA loan. But if you need down payment assistance, I have options of repayable down payment assistance, or we could try Georgia Dream, or we could do a program called $100 Down HUD Homes. And Candy is actually the expert on those. And there's, basically we can put a second mortgage behind it, whether it be a grant that's not payable or a second mortgage that's repayable over time. You don't have to have 3.5, but it's better if you do. I'm gonna let Candy go into HUD homes.
Sure, sure. So as I stated initially in my introduction, Southern Home Management is an authorized HUD listing agent. And you ask, what is a HUD home? A HUD home is a home that HUD comes into possession of as a result of a default of an FHA insured mortgage. Someone with an FHA mortgage was unable to make their mortgage payments. HUD insured that loan. It becomes their possession once it goes into default. Those houses are then put on the market, and they could range from poor condition to good condition. So there's varying levels of the condition of those properties. And in some cases, HUD even allows you to finance um, some repairs that may be required when an appraiser goes out and says that this and that needs to be done. In some cases with a HUD home, you can actually finance those repairs. But the $100 down program is a program that HUD allows anyone with an FHA mortgage, buying one of their homes with an FHA mortgage, instead of the 3.5% down, you're only required to pay $100 down. On a $100,000 house, normally be $3,500 down. With a HUD home, it's $100 down. Now, you're still obligated to come up with your earnest money. You're still obligated to come up with your inspection money. And those things are aside from that, but we're talking about down payment. HUD allows you to do $100 down. And that will significantly save you some money that you could put towards other closing costs. HUD will pay up to 3% of closing costs as well. But in some cases, that may not be enough. But that additional money that you may have had to put down, you could put towards your closing, put towards your inspection, whatever it is that you need that money for. That allows you to free up a little bit of your funds. They also have another program called Good Neighbor Next Door. And what that is for teachers, police, firefighters, EMTs, only in designated revitalization areas, areas that they deem to be an area in need of revitalization. Will they allow those particular professions to get into a home that is 50% off? So there's a lot of steps to that program, but ultimately, the Good Neighbor Next Door program can allow a first responder, EMTs, teachers, any of those people to get into a home for 50% less than what they're actually advertising it for. So that's something that we could talk about. If you're in one of those professions, we could see where those revitalization areas are, if that would work for you, and the process of getting that a home much less than what you would pay normally.
Well, and I'll say that I have seen on after working with Candy and her knowing HUD, and then working with agents who don't do HUD homes very often, and then they go to the HUD store and they're trying to submit the bid, and it is imperative that your agent know how, and Candy can
Absolutely. And the buyer cannot submit a bid on their own. You have to have an agent submit the bid for you, and they have to be registered with the HUD website. And my office actually trains other agents on how to do it. We've done it so long that we hold monthly training for other agents to show them how to do it. But you want an agent and a lender who knows how to do a HUD home, because although it's an easy process, you can very easily fall off of track if you do not follow their guidelines. And you want a lender. Lindsay and I've done them together. Um, you want somebody that stays on track, gets done as per their deadlines, because they're not optional. When you're dealing with a government owned property, which is what a HUD is, you have to follow their guidelines. But it's nothing to be afraid of, because if your realtor and your lender know what they're doing, they'll get you through all the hoops and get you in a house at a good price, a low down payment. And possibly, if you're a Good Neighbor Next Door program recipient, you could get a house for half off.
half off. I mean, you can't do any better than that. I tell you, I don't frown at anything half off these days, and to
No,
get a home half off is pretty amazing.
absolutely.
And I know those were really big back in the early 2000s, and then they went away for a while, or I mean, there were no
But they're
billboards.
coming back.
Yeah,
Gradually,
they
they're
are
coming
coming back.
back. We're
Yeah.
starting to see more and more HUD houses on the market, and I think we'll probably see more and more of the revitalization areas as things start to come back on the market. So we'll just have to look again. Every scenario is different, and once we know what you need, then we can find what will work best for you.
Exactly. And
Mhm.
just to go into Georgia Dream, a lot of people are asking about down payment assistance right now. And on my end, I do have Georgia Dream. Georgia Dream has a pretty amazing VA rate. They do not give any down payment assistance for their VA program. It's just a better rate, and it's a pretty amazing rate if you're a veteran. So if you're working with a lender, if you want to work with me, I'd be happy to put you in at Georgia Dream to get that better rate. They do have down payment assistance. The regular Georgia Dream program has an income limit, has a price limit, and they will give you a set amount. But the Plus loan is relatively new. That along with the VA one. And Plus is actually up to a higher income limit and a higher price point. And certain areas are in designated revitalization or specialized areas, and those actually might be eligible for the higher amount, even though you may not be a first-time home buyer. So just make sure to get with me, and I can go over all the ins and outs of where you're planning to move and what your income is and that kind of stuff. The other thing is a lot of people that have applied with me for Georgia Dream recently have either had their income was too high or their credit scores were lower than what the minimum is for Georgia Dream. So we do have two alternative options available to you. One of them will go down to a six, no, both of them will go down to a 600 score. And they are repayable down payment assistance loans. So they're repaid like a second mortgage behind the first mortgage over 10 years. So those are available, and we can go over those when we chat. The last one is I am a veteran, military spouse, or currently serving. This is my favorite loan. I always say that, but they're all my favorite. I just love them all. So
Whichever
VA
one you get
loans,
somebody in.
yeah, yeah. I mean, and for veterans, you fought for our country, and I feel like we owe you so much, and zero down payment is like the least we could do, but you don't have mortgage insurance either. One thing that changed in the 23 years I've been doing this is back in the day, you had to have a certain percentage of disability to have your funding fee waived, which is the fee that VA charges to get a VA loan. Now you can have 10% disability and you are waived from your funding fee. So you do 100% financing, no MI, no funding fee if you collect disability from the VA. You can get, government subsidized rates. You can buy primary homes only. Now, VA, I do have a little tricky trick that I can basically work for any veteran that wants to buy before they sell. And just get with me. I'll give you the scoop if when you call. But you or your spouse must occupy the home within 60 days of closing. There is a huge issue, with occupancy, right? Their occupancy fraud is on the rise, but with a veterans loan, it is rule that you have to move in or your spouse has to move in within 60 days to buy a home and call it a primary home. So FHA also has that rule. Every home, when you're buying a primary home, you have to be able to move in within 60 days or it's not a primary home. And I've actually had that come up on someone who was putting an offer on a 2-unit, and the agent, they had already had leases that were good until the next year. Well, that meant my buyer would not have a vacant unit to move into, so it couldn't close because there was not anybody going to be moved out in time. So these are things that, working with someone who knows what they're doing, they're going to be able to hit those things up front and not put you through that of falling in love with a 2-unit home just to find out you're not getting it.
Right, right. And in some cases, some counties offer significant tax reductions for veterans. So that's something that we could check on as well, depending upon the county you want to live in, what is offered, and that will significantly help with your home costs as well.
Property taxes, yep, that will
Hmm.
help. I think Paulding County is one of those counties that give a disability waiver.
Hmm.
So yeah, we can definitely look into that for you. And also senior exemptions. I know a lot of people are moving out of their homes. Their kids have moved out, empty nesters don't need all that space. There are counties in Georgia that do not have a senior exemption. And that might not be well known, but when my mother was looking for a home, that was one of the things that I researched was, what counties in the state or in North Georgia have senior that are not income related. Because if they have an income limit and your income exceeds that, you're going to be stuck paying school taxes. So at the end of the day, we can find all that out for you so that you are
Absolutely.
knowledgeable and know where to look.
That's right.
Now, the things that go into qualifying, like I was telling you before, is mainly your debt compared to your income. And when you are making a salary and you come to me, it's very easy to calculate a salary income. But if you are making hourly income, that is considered variable income, which means that I'm going to have to dig a little deeper because you're not always working a 40-hour work week. So if you're getting bonus, commission, overtime, I may ask you for the last pay stub of 2024. The reason I'm doing that is I want to see the breakdown of bonus, overtime, commission, all the different types of pay. Because if I don't have a 2-year history of other, commission, overtime, sometimes we can make a case for a 1-year history. But if we don't have that history, that's going to impact how much you can qualify for. And this goes back to why I don't write pre-qualification letters. Um, I've had too many people tell me they make a salary of 90,000 a year, and then I get the pay stubs and they're hourly and they don't make anywhere near 90,000 a year. So to me, I would rather give you the bad news of, hey, I need the documents, and then give you the bad news of, no, you're not going to qualify for 600,000, but you will qualify for 500, and here's why. Because I don't want you out looking at $600,000 homes that you can't afford.
Or even worse, put those houses under contract, pay for inspections, get, all the way down the road to underwriting. And then that's when some lenders finally ask for that paperwork and you never qualified to begin with because the lender never asked for it up front. So
Exactly.
that's very important. So although it might seem like a lot up front, it's to protect you and it's to let you know exactly where you stand so that you're not wasting your time or money on looking or shopping for a house that may or may not be one that you can qualify for.
Well, I don't know if any other loan officers do this, but I tell people, I'm like, listen, I'm like a priest. Just tell me everything because
And she's gonna find out anyway.
I'm gonna find out, and it's a lot worse if I have to try to fix it during the process than if you just tell me up front, like, hey, I sold a car last week and I deposited $20,000. Is that a problem? Here's how we're gonna fix that. And
Right.
then I
Much
tell you
easier to fix it if we know up front
exactly.
than to try to explain it later.
Right.
So we can tackle a lot of situations like that before it ever gets in the underwriter's hands. We can already explain that. We can already have documents in order before it ever gets that far. So I always say, hey, let's just tackle everything straight up front. Tell us the situation. We can work through it, and there's no surprises at the end. And that's especially when we don't want surprises. It's time to
Exactly.
close.
Exactly.
Yeah.
And so when I pre-approve you, I'm basically going to give you a pre-approval letter and I'm going to give you a worksheet. And usually a lot of loan officers, frankly, do not give worksheets. I like to do it because I have had too many people that focus on I need zero down and they don't think they need any money for the loan. They don't know that they can't roll in the closing cost. So when I give you a worksheet, it's going to show you the standard closing cost based on the price. It's going to show you a couple of options on rates. It's going to show you what the estimated payment is. But I cannot stress this enough. Every house is going to be different. So if you're looking at a house that is investor owned, they don't have homestead exemption. So their taxes are likely higher than what you would pay if the owner had homestead. If they are a senior and they are exempt from school tax, you're not going to get the exemption if you're 30 years old. So I have to calculate the higher taxes. If it's a condo, condos qualify for certain programs and certain programs they don't. So certain programs they have higher rates for condos. These all go into how much your payment is going to be because even though the screen does not say A as the last letter, the whole payment is principal, interest, taxes, insurance, and HOA. That is your that is your house payment. And we call it PITI, but it's the sum of the mortgage payment that includes your principal amount, your interest, your property taxes, your homeowner's insurance, private mortgage insurance premiums, and HOA. So when I calculate debt to income ratio, I'm looking at how much is your gross monthly income. Okay, it's $10,000 a month. Okay. And you have $1,000 in car payments, installment loans, and credit card minimums. And the new house is going to be a payment of 4,000 a month. Well, if I add up 1,000 in other debts plus 4,000 in the mortgage divided by 10,000, that means that you're at 50% debt to income ratio. 50% is where conventional loans typically stop. They don't allow you to go over 50. They don't typically, they always stop. FHA allows you to go a little bit higher on that back ratio, which is the housing plus the other debt. They allow you to go 46 on the front, which is your housing divided by your gross income. They allow you to go 56 on the back as long as your credit scores are great. If your credit scores are lower, they're going to restrict your debt to income ratio, which affects qualifying. So this is why it's important for me to have all these numbers and have them pretty exact as I can be, because this goes into your qualifying. And if you're going to work with someone who's going to take your word for it, that you make, $100,000 a year, I hope you do, because if you don't, you're going to have the surprise of your life when you don't qualify for the mortgage that you just wrote a contract on. And I see it a lot. I was actually dubbed Lindsay the Fixer for a number of years because I was known as the person that would always take the calls to fix the problems when they blew up at the table.
Yes.
Um, so,
I've called her. I've
yeah,
called her. Lindsay,
yeah.
can you help me with this deal? Absolutely.
Yeah. So, again, let's just approach those things up front. And I hope that you never have to have a deal blow up at the table. But if you do, I will help you. I will, if anybody can fix it, it's going to be me. I'm like the mortgage guru of mortgages. That's all I know. And then back to Candy.
All right, inspections and appraisals. So we have that found the house. We have negotiated a contract, which has been signed off by the seller, and we are to our next step, which is a home inspection. All right, as we talked about before, a home inspection is one of those costs that are out of pocket. That's something that you will have to pay for up front. You have to pay that inspector for his time, but you can choose who you want. I can provide you a list of people I've worked with before, but ultimately, whomever you choose for a home inspection is up to you. A home inspection is not required, but we highly recommend it because we want you to buy with confidence. We want you to know exactly what you're paying for and what you're taking a mortgage out on. If for some reason you find a list of repairs that scare you to death, we can back out of that contract. You get your earnest money back. There also, we can ask the seller to make those repairs. And we can go back to the negotiating table and negotiate for the seller to take care of those repairs. If they're minor repairs that may not affect our financing, we may negotiate with the seller to reduce the price. Maybe the carpet has got a few stains. We don't like the floors or, something like that. We may convince the seller to reduce price. Although, that may have been something we dealt with initially. Sometimes what I tell people is, look at everything on the list, and an inspector is going to come up with a big long list of things, and sometimes we can use some of those things to negotiate with the seller to get things done that you don't want to have to deal with or that you are concerned about, and those things may or may not be a deal breaker for you. If we have to walk away, the seller refuses to do it, or you don't want to buy a house that has a foundation issue, which I would highly recommend you don't, we can get our earnest money back, we can walk away, and we can begin to look again. So the inspection process is very important. It can affect the entire process, but that is one of the things that we just definitely want you to do because we want to know what you're buying. We want to know that you're comfortable with what you're buying and that you're going to be happy with the house that you bought. Um, After the home inspection is done, at that point, that's usually when Lindsay will get with you on ordering the appraisal. That's the next step in the process. We don't want to order an appraisal before we're not finished with the home inspection because we don't want you to pay for that appraisal, which is another out-of-pocket expense, and then the home inspection come back, and then you're out of money for both of them. So we try to eliminate one thing before the other is done so that we're not wasting your money. So the appraisal is something that we don't have a choice over. We don't get to pick. Lindsay don't get to pick. She just puts in an order for an appraisal. The system picks an appraiser, and that person does an appraisal of your property based on comps that are similar properties. And if at that point the appraisal comes back high, which is a benefit for you. You've got a house under contract that's worth more than what you're paying. And in some cases, with USDA, for instance, you might could roll in your closing costs, or if you need that done, or if the appraisal comes back lower, at that point we can go back to the seller and renegotiate. That is one of those contingencies that I talked about when we write an offer. We have an appraisal contingency. Some of those are automatic, such as with FHA, but we can add that to any offer and make our appraisals contingent upon they have to appraise for the purchase price. Otherwise, we're going back to the negotiating table and we're either going to get that house for less or we're going to have to walk away because we can't buy a house with a mortgage that appraises for less than what we're offering unless you've got a whole lot of cash in your pocket. And that happens sometimes too. I've seen it, people pay out of pocket the difference, but those were extenuating circumstances that we don't see every day.
Right. And I like to tell people at the end of the day, right now and in the last couple of years, people have been offering over asking or, they're asking their agents to run comps. But at the end of the day, an appraisal is a protection mechanism because if you have offered too much or, you've asked for repairs and in lieu of repairs, they just threw a little bit of closing cost at you, at the appraisal is going to notate, depending on the program, if there's a structural issue that's flat out, they see it. If there's an active leak, if there is termites, like tunnels, that maybe the inspector missed, they're going to bring those things up and they're going to make that appraisal subject to, meaning it's subject to a reinspection. And that means that Candy then goes back to the listing agent and says, okay, here's the things, well, goes over it with the buyer and says, okay, what do we want to ask them to do? Well, no, I'm sorry. The subject to appraisal means you got to do everything. You've got to get those items done in order to close. Um, if the appraisal comes back lower, that's your protection. Because if you don't want to overpay for the house, the appraiser is going to say, hey, you made an offer for 385. Here's what I think this appraisal is worth, or this house is worth. It's 375. At that point, you get with Candy, and Candy says, well, let's go back to the seller, let them know that the appraisal came in short. The great thing with a VA loan is that VA has a process called Tidewater. Tidewater is basically when the appraiser says, I'm not finding the same price point that this house is under contract for. So agents, give me your comps. And then I then get the comps that the listing agent or the buyer's agent used to come up with the price. And then he or she gives us the report. But at the end of the day, a contract is usually written where the contingency is if the house does not appraise and in the time frame that you have, you get your earnest money back, or the seller has to drop the price, or you have to agree to pay more. And that is where, Candy would negotiate that and make sure that we have our bases covered. And it's important for me as a lender to get the appraisal done in time because if the contingency is over and the appraisal is received after finance is over, on an FHA, it's not part of it, but on a conventional, it would be a big deal if it came in short because at that point, you don't have an out. So that's another reason why, we do appraisals because we want to make sure number one, the borrower's not paying too much, and number two, the collateral is sufficient for us to give a loan.
And that's another thing that I'd like to bring up is and initially when your agent is writing that offer, they have to take into consideration all of those deadlines, and you want to be sure your agent knows what they're doing in that respect. How long do they need for a financing contingency? How long do they need for an inspection, an appraisal, and normally, you would string those out along the process for the timelines that it would take to do those. But your agent needs to stay on top of those things. And that's one thing that is part of our process is staying on top of those deadlines so that we are not letting a date pass when something has not been fulfilled that should have been. And that's part of fulfilling your end of the contract. And that's what we do for you.
And that is why communication between the realtor and the lender is paramount because if
Mhm.
the lender doesn't know when the home inspection was, doesn't know when to order the appraisal, you might miss that deadline.
Absolutely.
And the underwriting part is nobody's favorite part. This is when everybody's usually stressed. But at this point, the inspection is done. You've decided, hey, there's nothing really wrong with this house. I really love it. I'm moving forward. We've ordered the appraisal. We've got the title being ordered. Now, underwriting is actually a underwriter for the company who is underwriting for the investors to make sure that the assets, the debts, everything that we put into the file is accurate. They're going to review for any undisclosed debt. So if you're writing a check to Aunt Mary for, the money that she lent you 4 years ago, if you're making a monthly payment, even though it's not on the credit report, it's probably going to have to be explained. These are things that the underwriter is looking for just to make sure that everything is accurate. They may request additional documentation. This is going to be the title because the title is not something that's immediate. It takes a couple of weeks. The underwriter is going to ask for the appraisal. Once we get that appraisal back, we're going to send it in and have them review it. The title is actually it goes back on the history of the property. And so you have chain of title, you have how that title has been held over the years, and it ensures that that the title to that house is clear. And then lender's title and buyer owner's title can be issued. But owner's title is optional, but I can give you a million reasons why you don't want to waive your owner's title insurance. I will tell you a very quick story. I had a couple who didn't think they needed a realtor, didn't think they needed to work with anybody except the lender, went under contract with a friend of a friend. Come to find out, it was family land that was subdivided, and one house was built several feet onto the brother's lot. That was the house they bought. They never got to move in. The brother parked a backhoe in their way and never let them move in. Had they not bought title insurance, which ironically the seller paid every closing cost, it was a USDA loan. Had the buyer not gotten title insurance, they would still be in that mess, trying to fight the family to move into a house that they could never move into. Crazy family, but the title insurance literally took over. It took 2 years, but they were made whole. It was like it never happened. And then a year later, they were back to buy a home with me. And actually got to move in. So that's the short story, but I always tell people buy title insurance because in Georgia, surveys are not required. And that's another reason why you might want to survey if you might have a question about neighborhood lines. And in a neighborhood, you're usually going to have a plat. But on subdivided family land, this is why you need Candy. she's gonna look out.
And that title insurance takes care of problems sometimes that we don't even know about. I
Yes.
mean, you may be buying a property that they requested title insurance from the seller. They just sent them over that policy and we never heard about it again. So that is a great benefit to have that insurance that backs you up. And it's not that expensive for such protection. So that's definitely something that I recommend to all of my buyers. Title insurance is a definite expense that I would call worth because
Yeah.
it will protect you in situations that could potentially be devastating.
Absolutely. And it protects you for life. It protects you even after
Mhm.
you sell the home.
It's
So,
a one-time fee
yeah.
also, by the
Yeah.
way. It's not like a monthly policy or anything. It's a
Right.
one-time fee at closing. You're protected as long as you own that property and beyond, actually. So, it's well worth it.
Yes. Well, and the last step is once we get the beautiful words from underwriting cleared to close,
Woohoo.
everybody is cheering, and we get the buyer and the seller together. We go to closing day. And I know in other states it's a little different, but in Georgia, you actually, unless the seller needs to sign early for some reason, or they're out of state and doing a mail away, in Georgia, you're actually going to the closing with the seller. So the buyer and the seller typically sit across from each other. You're in one room. I like to try to be at all of my closings in North Georgia. I can't always be at every one of them, but I do love to go to as many as I can. Your agent is representing you. Candy's sitting there. The
Absolutely.
seller's agent is sitting there. And then you have the closing attorney. Georgia is an attorney state. So we're all sitting at the closing table. But before we got there, basically, once your file is cleared to close, I'm going to then go over the final numbers with you. We're going to get the documents and instructions out to the closing attorney, and then we're going to get those closing documents to them so that they're ready for you to come in and sign on the closing day. And in Georgia, there is a wire law that any funds over, depends on the lender. Some will make exceptions, but it's typically anything above $1,000 has to be wired by law because after the crash, people figured out how to forge certified funds checks in Atlanta. So now we have the state law that we have to have wired funds. Um, so I then go over that and make sure that you're going to get your wire there in time so that you're not sitting at the closing table with an absent borrower wire that you didn't get your wire there in time.
And
Um,
that wire comes from your bank. You can
yes.
usually any bank that you bank with can do a wire for you. Some people might say, "Well, how do I do a wire?" But you just go and
Oh,
talk to the teller at your bank and they'll help you out with that.
I make it so easy, y'all. I give you the final closing disclosure. I put the final number in an email or text for you, and then you get the wiring instructions, usually password protected from the closing attorney. If closing attorney is okay with me texting them because I don't email them because they can be intercepted and then your money ends up in Somalia. We don't want that. So I usually will text you a copy of the wiring instructions so that you have them literally on your phone with the cash to close number, and you hand the phone over to your teller at your bank and say, I need a domestic wire, please. I'm here. I'm going to sign my life away for a house that I'm going to make equity on and family wealth, generational wealth. And they will wire it. And credit unions, I will say, sometimes take longer because they don't have the capability to send the wire the way bigger banks do. But at the end of the day, I always try to get you the cash to close number as far ahead in advance as I can because I'd rather you sit there and relax the last week before closing than to stress about how much money you need to wire. And I am not a procrastinator.
No, she's
Might not
not. She
People
gets it
might not
done.
like me, but I'm a little bossy because I like to get things done early, and you will thank me for it because you are
You do come
passionate.
to appreciate it as a realtor and as
Yes.
a buyer. You appreciate Lindsay's willingness to get things done soon because nobody likes everything to come in the last minute. No real estate agent, no buyer wants to see that settlement statement an hour before closing. And some lenders do that. You don't want to see that.
Well,
You
at
want
first,
you want that days ahead so you can prepare, so you can plan.
Well, and worse, when I used to be the fixer, it was the day before closing or 2 days before closing that people found out that they didn't qualify. And I'm like, man, I would have had that loan clear to close a week ago. Like, why in the world was it waiting until the day before closing? So that's why I don't like to procrastinate, because if I'm gonna find something out that you hid from me, by golly, it's gonna be in the first 10 days, because I'm not gonna
Absolutely.
hold the file and wait.
That's
Um,
right. That's
yeah.
right.
So,
So before we go to closing, I just wanted to hit
yep.
this. We're going to do a final walkthrough. We're going to walk through the house and make sure it is the same house we saw before. Make sure that nothing's happened that would cause us to have any delays. We don't want busted pipes. We don't want trees through the roof. We want to make sure the house is exactly what we're expecting. So when we get that key at the closing table, when you go back and open that door, there's no surprises there. So we're either going to schedule that the day before, the morning of, whatever the case may be, that we work out so that you know that that house is in the same condition as it was the last time you saw it. So once we do that, then we can go to closing and we can start signing those documents.
Yep. And then I even do hybrid closes. So you'll electronically sign a lot of your package the morning of, and then you'll go to closing and sign just the most important documents. And then you're out of there and you are on your way to unpacking and enjoying your new home. The seller receives the proceeds. And keep in mind, our job does not end on closing day. Okay. I mean, we are here for you. I am sending reminders when at the beginning of every new year to remind people to file their homestead the year after they buy. Candy is there. If you get something in the mail saying to pay for your deed, don't do it. Don't pay
So
for it. Call the attorney, call Candy, call me. We can get you a copy of your deed for free. If you have a question about escrow, if there was something that you needed to know about your home warranty, these are things that Candy and I can help you out with after closing. And there's a lot of transactional agents and lenders out there, and that's just not us. And
well,
I can't stress, I mean, with the lack, I mean, you know, the lack of care that goes into so much these days, I can't pour enough out of myself for each loan that I do. So it matters to me so much. And to be here after closing is invaluable to a buyer, and it will be invaluable to a seller to have their agent available after they bought.
right. And our business thrives on repeat customers. And that's how we keep repeat customers because we are there for you after the sale, after the closing, 6 months down the road. You've got a real estate question. You know that you can call me, you can call Lindsay, and we're going to be there to answer the question for you. If it's something we don't know, we'll find it out for you.
Yeah.
So that, like she said, it's not just a job to us. This is something that we love to do, and we're always there for you throughout the process and after.
Yep.
Mhm.
And that's basically it, guys. So, we really appreciate everybody hopping on and learning a little bit about the home buying process. There is so much that we could go over and talk about for days. But at the end of the day, we just want to stress to you that we are always here for you, but it is so imperative that you work with someone who knows what they're doing, because there's a lot of um, ways that you can get harmed, whether it's losing your earnest money or just having a sour taste for buying a home after going through a nightmare. I hope that you get into the home, and if we can help you in any way, we certainly are here. And I will say, we actually did a class a couple of days ago. We were able to give out some certificates for $500 in lender credit if you work with us. If you will message me, if you watched this on live and you would like to get a certificate to work with us, I am going to put the expiration of next year on there. So hopefully we can get you prepared. And if there is credit questions, anything about credit repair, how to get your scores up, what the waiting time is before after bankruptcy, I'm a walking mortgage guideline book. I can tell you everything you need to know and get you prepared. And if there's any question about the real estate part or listing your home or anything that Candy can do, she is amazing.
Thank you. And if you just want to talk about your situation, you're not ready to apply for a mortgage or you're not quite ready to move, you just want to talk about your situation just so you can get your bearings on where you stand, give us a call, shoot us an email. We'd be glad to go over it with you and see what we can do to help or answer any questions that you have.
Absolutely. Well, thank y'all so much, and y'all have a wonderful night.
Good night.
Night.